So today is Monday, September 14th, and we are going to go through a few things today. First, we're going to cover homework 1 and 2. We'll talk about the setup for upcoming homework 3, which we do next Monday. Also, as a reminder, the BMC certification is due this Friday. And today we will start our first group project, which is called the Bloomberg Trading Challenge. So we're going to put you into your teams, and each of the teams is going to have to identify sort of a team captain who will be managing the trading challenge on behalf of the team. So a lot to cover. Want to go ahead and jump right in, and we're going to start out by refreshing on homework 1 and 2. Okay, so I'm going to go ahead and share my screen. And basically, we'll use United Airlines as an example. But for homework 1, it's relatively straightforward. You would have gone to the RV screen, and you had to find an industry that had a negative spread. So over in custom, you would have added a column for ROIC as of the latest filing. You would hit enter. You would have gone to WACC, hit enter, and you would have saved this as a custom template, probably called spread or something along its lines, so that you could reuse this. And again, under settings, global settings, you'd have unchecked the top section to get more space. And hopefully you could have relied on market cap weighted average. But if on your screen, Bloomberg had just started to fix that, if you had zeros for there, you could have also added the average and done the analysis based on the average. Although again, we want to use market cap weighted average. And by the way, the airline industry is a good example of why we want to use market cap weighted average, because you can see that there's an airline called Grupo Aeromexico, which is a tiny airline, 143 million of total market cap relative to the industry, has a negative 37% ROIC, and that is skewing the average to be much worse than it really is for the industry, because basically a tiny airline counts just as much as a giant airline, and we want to weight according to size. So this is why we're using market cap weighted average as opposed to the straight average. Okay, but nonetheless, that is the data. And so basically for homework 1, you need to find a negative spread industry, file, take screenshot, save the screenshot. Now just remember one more thing. You're working on a remote PC. So you're going to access Bloomberg through the cloud. So if you actually save to this PC, you're actually saving to this PC on a cloud in a server, not to your local PC. Okay, so you have to make sure that you're actually saving to your local drive, which should show up here. It's not, I'm actually on a local version of Bloomberg, but if you, on the network, should be up here, you should see a drive number or drive letter for a local drive, saved to that local drive. Somebody said they sent a version to themselves, because you can send a screenshot via message to yourself. Worst case scenario, you could have just gotten out a phone, taken a picture of it. Basically for homework 1 and 2, we'll be a little bit more liberal on this. But starting with homework 3, you need to actually have screenshots, because you would have been certified by that time, and you need to have screenshots with serial numbers. Okay. All right. So question about homework 1. Again, this should have been finished by Friday. Okay. So the other point is we're going to today talk about homework 2. But before we do, I also want to mention Bloomberg certification. So this is due this coming Friday. Excuse me. So under Bloomberg, if you go to your BMC, basically for Friday, you need to make sure that you complete these 4 sections. And what's most important is when you complete these sections, that you show that you have 70% or higher correct in each one of the sections. Okay, so this plus a certificate equals certification. If you don't have 70% in any of the sections, you're not considered to be certified. And I think some of you might notice this. Bloomberg only allows you to take a section one time. So for example, if you do economic indicators and you score 65%, it doesn't let you go back and redo economic indicators. Okay, so the only way, if you go through this and don't score more than 70%, to retake a section is to create a brand new account. You have to use another umd.edu email to avoid the $149 fee. So you have to create a brand new account with another umd.edu email and retake it. Okay, you don't have to retake all the sections. You have to retake the section that you failed, but essentially you have to get to 70%. And so, for example, if you had failed this one and passed the other three, take a screenshot showing these three passed, take another screenshot under a different account showing this had passed, and that would cause you to get the credit for the Bloomberg certification. Okay, but this is what's due on Friday. And for those of you that haven't finished, just remember, don't just go blowing through it, because if you go through it and you answer it incorrectly, you can't take it again. Okay, you can only take it one time. It's just a little word to the wise on your BMC certification. The other thing that's coming up, by the way, relative to Bloomberg, is good news for you, is on the 23rd of this month, which is a week from Wednesday, the Bloomberg for Education team is actually going to come. They're going to do advanced Bloomberg training in all of the sections in our class all day long. So they're going to be our guest speakers the entire day. Okay, and it has two advantages for you. Advantage number one is people don't usually get the Bloomberg people to give personal one-on-one training. And they're going to go through some screens beyond certification that will be very helpful for you in using the terminal. But number two, these are the recruiters. So the people that are going to be teaching the class are the people that recruit on campus undergrads to do either internships or full-time positions. And our class, 443, has become a feeder class to Bloomberg. They hire out of our class, and they've been starting to do this over time. So it's a really good opportunity if you're looking for a job or an internship to meet the people that otherwise would be the ones recruiting on campus. Matter of fact, it's win-win for them, because particularly in this virtual environment, it's harder for them to access the students. So they're kind of excited about getting to virtually be able to present to you. The primary reason is to teach you about the terminal, but I'll tell you secondary reasons, they're here to hire students. So it is your opportunity to start intermingling with them and connecting with them so that after the session, if you want a job at Bloomberg, there's an opportunity to work with them. So that's coming up a week from Wednesday, and they're going to be here for all 4 sections during the day. So very excited about that. That's coming up on the 20th, I think it was 23rd, whatever that Wednesday is. All right, so back to homework 2. So homework 2 was specifically on United Airlines. So again, it was an EIC assignment, and I did the EIC is the video, but we'll start out with the E. So you would have gone to UAL, US Equity. You'd have gone to RV, which is the section that compares against other peers. You'd have gone to make sure you had the analyst curated BINA Airlines Val peers. That would have got you 14 people on the list. Now, some people chose a different subset of the BI peers, which would have gotten you fewer companies on the list. Okay, so the one I'd asked you to use for the homework assignment would be this one. And so there should be 14 people on the list. So you choose it by the drop down. Okay, so then you would have gone to markets. And then you would go to beta. And here, Bloomberg is calculating an industry beta, market cap weighted average, as well as betas for all of the companies, both raw and adjusted. Okay, so again, summarizing across the teams. So just as a reminder, if I look at the betas, I'll do United as an example. The individual calculation can be seen on the beta screen, although you didn't have to go here, because again, you would have seen the data on the industry screen. But the point is, the way they do the beta is they take weekly changes in a company's share price, this being United, and they take weekly changes in the S&P 500 index, 2 years worth of data by default. So it's 52 data points. They plot it out here, and then they draw a trend line. The slope of this trend line is the raw beta. Okay? So basically the slope of this trend line is 2.381. So the idea is that if the market goes up 1%, United tends to go up 2.38%. And if the S&P 500 goes down 1%, United tends to go down 2.38% over the last 2 years. Okay. Now, there's also something called the adjusted beta, which just puts in a regression coefficient. And the adjusted beta is 2/3 of the raw and 1/3 of one. It just moves the raw 1/3 closer to the mean. So when Bloomberg does, for example, CAPM, cost of capital, it uses the adjusted. All right. But for our purposes, for economic sensitivity, I am choosing for our class to use the raw, so we're all using the same information. So raw beta, economic sensitivity is what we're going to use, right? So back to the screen, RV, markets, beta, and you would take a screenshot of this for your submission, save it or send it to yourself. And then essentially, first question I would have had you write up in the 500 words is this industry economically sensitive? Yes, no, and why? So what would be the answer to that one?
It is economically sensitive because the raw beta of the average raw beta is at 2.01, so it is 101% more sensitive.
In both directions, by the way. If it
Yep.
goes up and down faster, twice as fast as the average stock. So yes, this is a much more sensitive industry than the average. Okay. And that's one of the key points I want you to understand in the E section. So for example, when we get to forecasting cash flows, we're not forecasting a straight line. This is going to look more like a sine curve, right? So or sine wave, I should say. So over time, it is going to be some boom and bust cycle. And we see that because the industry is sensitive. It's a 2.01. It's twice as sensitive as the average S&P 500 company, probably to economic changes, right? How about United? What can we say about United relative to the industry?
It's more average company in the industry.
It's what, I'm sorry?
More than the average company in the industry.
Okay, so it's one of the more sensitive, but how does it compare to the industry average?
So it's more sensitive.
Yeah, because the 2.38, it's going up 238% of the industry, where the industry is only going up 200% of the S&P 500. So it is even more sensitive in both directions than the industry. So United is even more sensitive economically. And that's the point. That's what I want you to understand. Versus, let's say that we looked up Walmart. WMT. So Walmart's industry, discount retail, is 0.44, and Walmart's beta is 0.31. So kind of makes sense. Like in a COVID-19 world, people are going to the store. It's particularly discount stores and grocery stores. And by the way, in a boom cycle, they were going to the stores. So at Walmart, yeah, they're going to the stores a little bit more, but it's not dramatic. And even when we go into recessions, people still go to the stores. In fact, in this recession, they're going to the stores more. So Walmart is a much more predictable company, much less changes in economic cycles. Although companies like Five Below, that's been a different story. Five Below has been much more sensitive. You make an argument that Five Below is opening a bunch of stores right now and booming because in a recessionary world, the idea that you can buy everything for less than $5, it's like the idea of the Dollar Tree on steroids, is basically been very, very popular. So that has gotten more sensitive as we've had tougher economic cycles. You probably see people start trading up from the five below as we get to better times. That's what the beta would suggest. So again, you see some differences relative to the industry, but you see differences across industries. And that's what I want you to start to understand when it comes to E and economic sensitivity. I also want you to understand that the United Airlines and the airlines, UAL, that's not just about the beta. Meaning, if we were to go more detailed, we'd see that 20 to 25% of an airline's cost is fuel. And so airlines are actually, excuse me, also going to be very sensitive to oil prices. That in times of oil prices, when they're high, the airlines are going to do poorly. And in times when oil prices are low, the airlines are going to do better. So what happens to the price of oil is also going to affect airline prices as well. So again, beta is just a simplistic starting point for economic sensitivity. We can go deeper than that, but that's at least the starting point for this homework assignment that I wanted you to look at. And that would have been the answer for the E question. Hopefully pretty straightforward. But before we go on, does that make sense?
When we refer to sensitivity compared to the industry, would we say it's 138% more sensitive to the industry because it's 2.38 compared to 1?
No, it's 138% more sensitive to the S&P 500.
Okay.
So the 2.38 means, as I said, what it really means is the slope of that line. If that line's going up 1%, we're going up 2.38 times the average company. And then if the line's going down 1%, we're going 2.38% down for every 1% down change. So we're going up faster, we're going down much faster. But that's to the industry. It's to an industry benchmark because we're regressing against the S&P 500. So United and the entire list of companies is more sensitive, but United is even more sensitive than its peers. It goes up and down faster than the average airline on this list. That's the way to interpret the 2.38 against 2.01. Good questions. Ask these questions as you go along. Get these clarifications now. That's what the class is about. All right, I. I stands for industry. To do I and C, you would then go to custom, and you would use the same spread template that you did in homework 1. And if you'd done this, you could have done this for homework 1. And again, ideally based on market cap weighted average. So for the industry, I, is this an attractive industry? Yes or no? And what data are you using to answer that question? What do we say about the I here?
It's not an attractive industry with the spread in between is about 8% because of the negative ROIC of 2.43% and then the WACC of 6.28%.
Great. As far as identifying the industry, you couldn't have said it any better. That's exactly the right answer that we're looking for the industry. That's good. Now I'm going to jump just for simplicity. What about the C, competitive advantage? Does United demonstrate competitive advantage?
Yes.
Why?
Because their spread is more around 6% with the negative ROIC of 1.33% and the WACC of 5.25%.
Versus
the 8% spread that the market cap weighted average shows for the industry.
Yeah, there you go. That's how you'd start the C part of the EIC. So United doing a little bit less badly, therefore demonstrating slight competitive advantage. Does everybody understand the math part of this? Because if you do, now we got to go back to the other part of your paper, which is the why. This industry, as he just said, has a negative spread of about 8 points. 6.28 minus the 2.43. Minus the minus 2.43. So about 8 point something percent. So here's the idea. Why is that spread so negative in context of the Porter 5 forces? These are the 5 forces. So said another way, these 5 forces, buyer power, supplier power, barriers to entry and exit, substitutes, rivalry explain the negative 8-point spread. So today, what about these forces today, did you say, explains why this industry is doing so poorly? For some of your answers for that.
I said that the supplier power is high, relatively high, because that there's only 2 manufacturers in the industry, which is Boeing and Airbus.
Okay. And therefore what?
And therefore that leads to the suppliers to have more power, which drives down profit margins for airline companies.
Okay. So I want to stop you. And I want to say that there's a yes and no to your response. So generically, yes, I agree with that statement. But does that statement explain why the airline industry sucks today? Is the airline industry at a negative 8% spread? Is the average airline losing money? Is the average airline basically in financial distress because Boeing and Airbus hold all the cards?
I guess not specifically, no.
Is that why the airline's in catastrophe today?
No, it's mainly because of COVID-19, but
That's what I want you to answer. So that's what I'm saying. We're going to repeat homework 3. I just want to be really clear about this. And your answer is no different than what I heard in previous classes. And again, I want to be much more specific this time. The way I want you to interpret this is I don't want generic. You can do that. You know how to do generic stuff. You're smart kids. But what I want you to tell me is why the industry today sucks. And it's not because Boeing and Airbus have all the cards. As a matter of fact, right now, Boeing and Airbus don't have a lot of power because people aren't buying any planes. They're putting planes in the desert that they're not flying. They're canceling orders for planes because they don't need them. Demand is down 70% versus last September. According to BICO, we're down 50% year to date in volume. That's why this industry is having such terrible returns. Demand evaporated because of COVID-19. So which of these forces would that go under?
Buyer power.
There you go. Because basically the buyer power has gotten so terrible relative to this industry for the reasons that we just mentioned. That's why this industry is having a lot of trouble. Let's go back to rivalry. Do you think that the competition for your airfare is the primary reason that these industries are doing so poorly?
Yes, well, not primary, but I think that it limits the amount of profit they're able to make on any of it if they are able to profit because of how many different companies, also like the lower end companies that they have to.
That's a long-term generic answer that if this were January 2020, I'd probably be saying the exact same thing. In fact, go back and hear me saying that in video last year in the same class. But today, that is not the case. Do you really think Delta and United and American are fighting it out as low fares to get you on their planes and trying to undercut each other?
Currently, no. Currently, they're just trying to fill them up any way they can.
That's what I want you to say in your papers. See, that's the point. I don't want you to give me the generic answer for something. I want you to explain the spreads today. And the rivalry today is upside down versus the rivalry it was 6 months ago because COVID-19 changed the world. The supplier power is upside down versus where you would expect it to be long-term because COVID-19 changed the world. Matter of fact, I'll give you another one. Substitutes. What do you think about the power of substitutes today?
You mind if I answer this one?
No, please.
Okay. So I think in terms of international travel, it wouldn't be as much of an issue because, airlines are the only option to get around. But in terms of national travel, I think that people are going to start using trains as substitutes for shorter flights because not only do they accommodate better for social distancing, but they're also less expensive. Train technology is getting more convenient. Personally, myself, from going to New Jersey to Maryland or anywhere not extremely far, I think the threat of substituting flights for trains is pretty significant.
And again, in a COVID-19 world, probably much higher than it used to be. That's what I want to hear. But I'll go a step further. I think even international is affected by substitutes. Because last time I checked, I have a US passport and the rest of the world has banned us from traveling anywhere because we're so horrible at managing COVID. So I couldn't even travel international if I wanted to as a business traveler. So how does that impact substitutes?
It leads to the fact there's more business working from just your homes, which is allowing for the industry to be hurt by less business travel, which is a mainstay of the industry. So people are either just driving around themselves because they don't want to put the risk of being in public transportation, or they're just not going anywhere in general. So
But I still have to conduct a meeting. I still have to do conferences. So how
right,
do I
you don't
do
have to
that?
fly.
I'm sorry?
But you don't have to fly to do that anymore.
What are you doing instead? What's the substitute I'm actually doing?
You're just doing it on Zoom.
Exactly. Virtual conferencing. 6 months ago, if we had talked about Zoom as a substitute threat to the airlines and business travel, like, yeah, maybe a little bit, but not too significant. Today, these virtual conferences are the way that we're traveling. So, I mean, you see the big tech conferences have been CES this year in January. They're not going to Vegas with 200,000 people. It's all going to be virtual. And that means that the substitutes and the power of substitutes has gotten a lot higher, right? So again, I'll be practical. You know, I have an elderly mom who's got a very serious lung disease, and we're very frightened for her in this COVID world. So she lives in Atlanta, Georgia, and right now she's actually staying with me here in Maryland because Georgia is so screwed up compared to Maryland. We decided it was safer to keep her here. So here's the point. 6 months ago, flying my elderly mother from Atlanta to BWI is a no-brainer. Now, I drove 12 hours to get her and 12 hours to get back because I didn't think that flying was safe. So that's the point. Substitutes changed. And the way I view substitutes has changed. I'm now willing to drive 12 hours where I would never thought about driving 12 hours 6 months ago. Flipping it around. Same thing. This morning, I did a conference that I would have normally flown to train people. This morning, I did it over a webinar. We use WebEx. And so that's the point. Substitutes are now much more viable than they used to. Barriers to entry. It's actually hard to get in the airline industry. So you don't see a lot of airline startups. That helps the industry profitability. But ironically, today the opposite is true. Now you have regulators that are telling people you have to fly empty planes to certain cities because we don't want to have those cities not have any service. So the airlines are actually being forced to fly unprofitable routes because the barriers to exit have actually gotten so high that if it was their choice, they wouldn't fly to some of these secondary cities, but now they don't have a choice or else they lose the gates or they lose access to federal funding. So that's the point, that the threat of new entrants has flipped itself on its head in the short term. So when I start looking at why is this industry losing money, it's not the traditional things, right? They have a demand problem. They now have a substitute problem, which is very serious. It's not because of the rivalry in the industry, and the barriers to exit are causing me to actually fly empty planes, and the supplier power isn't really hurting me because Boeing and Airbus right now don't have a lot of sway over forcing me to buy planes that I don't need. And that is what explains today. And so what I'm telling you is when I'm asking you to redo homework 3, by the redo of homework 2, this is what I'm talking about. Meaning I want you to tell me, not the generic answer, I want you to tell me what's really going on. Use real world stuff to tell me what's really going on, because the second part of this question becomes even more interesting. What's going to happen in 5 years? Because this is what Wall Street's trying to figure out today. What is this industry spread going to look like in 5 years? Right? Is it going to go back to normal? Is it going to go back to where it was 6 months ago? Is it going to be less than normal? Is it going to be better? Like, what's that industry going to look like? And I want you to start talking about it in terms of the forces, because generically, if the forces don't change, then the industry spread is going to be about where it is. If the forces get better or worse, then the industry spread will get better than worse. I don't think realistically the airline industry is going to get worse than it is today, but is it going to get as good as it was? So what did you say about the future?
Well, if I can answer that, I'll say I think it's gonna do a little better. It'll still have a negative spread, but because they're spending so much money because of the exit barriers that you just mentioned. I think some of the companies will go under, if I'm being completely honest, at least the smaller airlines. So that might help them.
Well, but let's put it this way. I want you to be completely honest. And by the way, you can cite, hey, American and JetBlue just did a revenue sharing agreement. They would have never done that prior to the industry consolidation we're having. And I'll go a step further. I could see a situation where American and JetBlue merge together because for survival, they may not have a choice. And that's something that the regulators would have never allowed that now might actually be on the table, that we could see further consolidation. And so what does that mean to rivalry in the future? It actually, long-term, if demand recovers, that actually takes away rivalry because we start eliminating competition, and it starts taking away that buyer power in a different way, because the buyers could actually end up with fewer choices when the airline industry does recover. We could actually play that out as a scenario. And the future part is, I can't tell you whether you're right or wrong, but I want you to start thinking about this. And you might even come up with more than one scenario, but I want it to be realistic scenarios. So what he just said is what he said, well, I think this could happen. Like, that's what I want you to write in your papers. I don't want the generic answer. I want you to tell me what's going to happen in the context of spread with these forces. That's a good answer.
So it's not as much about right or wrong for it. It's seeing that we're actually able to apply it to something real.
I'm sorry?
It's not about actually like getting, it's not really about like the right or wrong answer for it. It's more about just trying to apply it to something in a real world setting.
Yes. Although, as I said, since real dollars are at stake in the real world, these eventually become right or wrong answers. Because the whole point of the analyst role here is you're trying to convince somebody with money to actually make a bet based on the scenario that you're laying out as being reasonable. So you don't want to just make out crazy scenarios, right? You don't want to sound like some crazy person when you put the stuff, because then nobody gives you any credibility to your scenarios. But I can also tell you that we can come up with a little bit of a disagreement on the scenario because we're dealing with an uncertain future, right? And so I'm going to look at your process and your assumptions. Somebody else had made a comment. You guys were talking at the same time? Or somebody else say something?
Question. I'm confused with like why buyer power would be low. Like, can I explain my thinking for why I think
Please.
it would be high?
Go ahead.
Like, well, because there's still like a lot of substitutes, and like the buyers still have other options.
Hold on. Are you talking about today or 5 years? What
both.
period are you talking about?
Like, I just feel like for both, like there's still a lot of airlines and there's other options for transportation as well.
Okay. So here's the nuance. So today there's a lot of options. Okay. But the question is, do those options have a lot of weight in explaining the unprofitability of the airlines? Is it the rivalry and the many options that we have that's causing the spread to be negative today, in your opinion?
I think that's like a consistent thing. Like, I think there's always, like, I feel like I don't understand why you would say buyer power is low just because that's not like a contributing factor.
Actually, what I'm saying is buyer power right now is high because of the lack of demand, meaning the buyer power is high, and that's hurting the industry because there's so few buyers, and the few buyers have essentially a lot of choices relative to what they used to.
That's what I thought. I thought you said that buyer power is low, so I was confused.
Sorry. Well, I guess what I meant with buyer power is low is the buyer power is hurting the industry profitability. So again, I'm sorry if I'm not using the right words there to explain it. But the intent is that the buyer power is critical, more critical probably than the rivalry today. But that could change because in a world where we have a lot more demand, all right, the buyer power starts to diminish because now there's a lot more demand relative to the industry, the relative buyer power. Then the rivalry starts, in my opinion, to become more important because when the planes start filling up, then it's like, okay, well, do I fly Delta or United as opposed, or Southwest, as opposed to now, am I even willing to fly? I think that's the existential crisis the airlines have is there's a lot of people on this call. They're like, I don't even want to fly. Well, it doesn't matter what the choice is if you don't want to fly at all. Versus when you start to fly, then and having a lot of choices tends to hurt the industry. So it is somewhat situational, right? And that's the point. What's the situation going to look like in 5 years? What's the situation going to look like for substitutes? Is virtual, whether it's meeting, conferences, whatever. How is that going to look like in 5 years?
I think it's going to cut down on the actual business usage for airlines, and it's going to be more of like kind of like something that you like, more of like kind of the high quality item that you buy like just for like going to different vacations or just going to visit other people. It's not going to have its business applications, so things like Zoom are just going to get bigger.
So what you're really saying is what's happening in the pandemic is probably a long-term structural change.
Yeah, I think it's going to consolidate to a couple bigger companies that are higher end.
Then that's the scenario I want to be reading about in your 500 words and how that has implications financially on the business.
I understand.
And
That's what I'm ultimately looking for.
we can just
It's academic class. So you got to use some of this language. But
Yeah.
that's the more important aha that I'm going to get if I'm trying to consume this than somebody that just writes a generic, oh, well, when there's a lot of airlines, there's a lot of rivalry, and that could actually hurt profitability. Great. What does that mean? How am I better off reading that statement if I'm a trader? I don't be a little harder on you, but that's the point. I want you to start going a little deeper than the generic analysis that you would normally do. That's what makes you better.
So
And
just to make sure, so you want us to have examples like that would like analysts that would sell to traders so that they can make money. So like you want
what I'm
answer
saying is,
like
if I'm a fund and I'm paying you for research, I want you to tell me what to do. What should I do with my airline stocks? This analysis is helping me understand what I should do. And so what you're telling me is, hey, this industry is going to stay kind of sucky for a long period of time, so you shouldn't be buying a lot of airline stocks right now, and here's the reasons. Or now's the time to get in because this industry is about to flip and it's going to get a lot better. Like, you're eventually going to give me a point of view on what you need to do, and this is going to help you develop that point of view. And it's data driven. So you're not making this up. And it should be based on some reasonable assumptions. But that's what I said. It's just don't give me the generic one. Tell me what you really think. And I know some of you are starting to articulate really opinions of what you think about the airline industry. That's what you need to write.
Awesome. So basically, at the end of the answer, do we need to say, all right, you should buy into this, or
Not
like
yet.
read it out?
Not yet, because we're breaking this class into industry analysis, EIC, and then we're going to do evaluation later with a buy, sell, hold opinion. This is laying a foundation to have that conversation later.
All right, perfect.
So yes, but not yet is probably the real answer to your question. By the way, the same thing is true with the C in competitive advantage. So let's go back to United. Why is United doing relatively less bad than its peers? Because that's what you told me. In the C part of the conversation we started earlier today, we said United was doing relatively better than its peers. So therefore, it's demonstrating some sort of competitive advantage. Why? I want the answer why. Like, that should be in your paper. Why is United doing better than its peers? So what'd you come up with?
I read a thing saying that United's flights offer more seats, which allows them to offer more seats during these COVID times of restricted people on flights, allowing them to not have higher revenues than other flights right now.
Great. That's what I want to hear. That's an interesting insight that could explain the relative performance. What else?
I had one specifically regarding their loyalty program. Basically how they use the loyalty program to raise significant amount of debt and then correspondingly a more stable equity offering. So kind of help them ease their cash burn over the next year or so compared to other airlines. And that's a big benefit.
So that's, yeah. And by the way, just for insight, again, because this is a real world class, the idea that I read this and they're talking about this is exactly helpful. Again, you can cite these things. You don't have to plagiarize, but cite them. That's perfectly acceptable for an answer. That's why I said read BICO, read BIC, or BRC is another good source within Bloomberg. If you haven't found that yet in your certification. But BRC, go to Bloomberg real quick, is in a company, you go BRC, which is Bloomberg Research Portal. And this is where the analyst reports can be found. So for example, this is what Barclays and JP Morgan and the analysts, this is where you find the reports. Now we don't have all of the analyst reports because we don't pay for them at the university. But for example, I was showing the class earlier, like here's what the Barclays analyst said on July 28th. And you click on it, can actually read the analyst report for United. And it's consistent with what he just said about lower cash burn. Okay, so United's been much more aggressive at cutting back, not the seats on the flights, but the number of flights as well, and furloughing more people in the short term. So the whole idea is because they've been more conservative about how many planes they're flying and parking more planes and leveraging cash to minimize their cash burn, that's why they're doing relatively better in the short term, in a nutshell, and including some of the things you talked about. But here's the point. What's it going to look like in 5 years? Same question. Is United going to be doing relatively better in 5 years? And is this enough to be sustainable? So what is their position to the industry going to be in 5 years? Better than the industry, about the same, worse than the industry average, and why? What's going to cause it? So if they go long term, what would cause them to be better than the industry long term? And conserving cash is probably not a good long-term competitive advantage. So how'd you guys answer that one? Where are they going to end up compared to their peers in 5 years? What's driving that?
I was thinking they're going to be more around the industry average, since they're going to outperform it, but I think it's going to still consolidate to like there's three companies, and once it's just like consolidated, kind of like that oligarchy, the profits are going to be pretty consistent around it.
Okay, well that's closer to what I want you to write. I mean, I'll give you some more insight. If you look at any research in United, you find out that United was really strong going to Asia. They made a lot of their profits on US to Asia, particularly out of San Francisco. So what's our view of international travel? If international travel isn't what it used to be, United's going to be doing relatively worse than say a Southwest or others, which are more domestic focused, because they just lost the international business, right? Or if it's Asia doesn't recover like it used to, then Europe recovers faster. Well, it's worse for United. Or if Asia does boom, then they'll do better than United. And that's the other point, business travel versus leisure travel. If the leisure travel market is more significant, United's going to underperform compared to say a Southwest or some of the discount carriers. So again, it's somewhat scenario based, but you need to start to understand the companies so that you can actually make some recommendations.
Excuse me, Professor.
Yep. Yes.
How did you get to this page? Is this just by?
So you go to BRC. Well, again, what you should be doing is number one, you go to BRC. And BRC is once you go to a company, this is the research, equity research summarized, the actual reports. And then you just click on the actual icon over here, it pops up the actual report. So this would give me the Barclays report. This is a JP Morgan report, etc. Now, there's another screen called BICO. And what Bloomberg does is they have analysts who read all those reports in BRC and then summarize them as like the cliff notes. And that's called BICO, Bloomberg Intelligence on the Company. So these are just the summary of the research reports that the analysts are writing. So if I don't have time to go look at all the reports, I just start here. This is kind of like the best stuff. This is my greatest hits, right? You also have the industry report. I mentioned IBIS World. You can go to IBIS World outside of Bloomberg, get some industry reports, or go to other sources. But again, as you start to do your certification, you're going to start to see that there's a lot of data here. Matter of fact, you also have an industry dashboard called BI. And each industry has its own industry dashboard. And they have one, you can search for the airline industry dashboard. It's under industries. I can figure out where they are. But the point is you can go to the airline industry dashboard. And on the industry dashboard, they have all sorts of data over here on the left about what's going on in the industry, from traffic data to just industry summaries, to market shares, to cost, etc. So again, just tools within Bloomberg. But again, what I really want you to do is distill it down. Give me the highlights. What's driving those 5 forces? What's driving the competitive advantage? What's going to change over time, and how that will eventually impact the spreads, both absolute and relative. That's why we're going to repeat this again. And we're going to do a homework 3. We're going to do a different industry, right? More practice. And the reason why we're going to repeat this is because in a couple of weeks, you're going to do a 10% of your grade presentation as a team verbally on EIC. And that's the group project. So I think we need one more, shot at the target here with some feedback before you do that verbal presentation. Make you better at what you do. So homework 3, kind of a repeat of homework 2 with some additional knowledge. We'll cover it next Monday. And then on Monday, we'll introduce the team project that you can start working on in about a week to do that. All right, questions about EIC or homework 2 at this point? Any other questions? All right, we're not done yet, but just as a check-in. So here we are this week. Today's Monday. Wednesday, we're not going to have a Zoom session. I'm giving you time in class on Wednesday to basically work to do homework 3 and to finish your BMC certification, okay, which is due Friday. Still take some time. The other thing that you have to work on this week, so our next face-to-face lecture on Zoom will be next Monday, a week from today. We'll go over homework 3. But the other thing that you're going to work on this week is the Bloomberg Trading Challenge starts today, okay? So in just a minute, these are your teams. For section, I believe this is section 201. So there are 6 teams in your section. And in just a second, I'm going to ask each of the teams to name one person who will be your team captain. And that person is going to be very important because I'm going to register them in their Bloomberg account to trade on behalf of their entire team. So what's about to happen is each of your 6 teams will get $1 million hypothetical dollars in an account today. You're going to trade equities for the next 5 to 6 weeks till mid-October. And then you're going to be graded on relative performance against the other 5 teams in your section. Okay. So the team that has the highest portfolio value whenever we get to the midpoint of the semester gets 5 points. And then team in second place gets 4 points, 3, 2, 1, all the way down to last place, which gets 1 point. Okay. So the person who has access to the account, there's only one person per team has the account, will be trading on behalf of the team, and they're the person who's going to help you get your entire team grade. Because even though they're the one trading, they're trading on behalf of the team, and this is a team project. Okay. So when I ask for the person, we're going to go to Bloomberg, and they're going to get access. And the way you get access is there's 2 codes, IDEA or TMSG. That's how you get to the Bloomberg Trading Challenge, IDEA or TMSG. Now, if you go there, you won't see anything because unless you have access, you won't be able to do anything. So what's about to happen is I'm going to create our class. So for example, this is the class from spring 2020, A class. So now a couple people had canceled their Bloomberg accounts, but these are the remaining accounts. But here's the point. Under portfolio value, I'm going to basically rank you from first to last over time. And so if you're the Noah Foster team, this is last semester, then these were the 22 companies, 22 trades that this company or this team had bought, okay, with relative profit and losses on the teams. Now they bought those 6 months ago, but regardless, you get a sense of how their portfolio is done. They made 15% since they started running the competition, Okay, you're all starting with $1 million today. Okay, and we'll talk about the rules in just a second. So let's go back to the competition. So this is section, where we're fall 201. So what I'm going to do is network, clone network, start you out with $1 million worth of cash. And this is fall UMD 43, fall 2020, section 201. Okay, I'm going to get rid of these people. And I'm going to start adding the people to trade in your section. So, team 2011, who's going to be your team captain?
I'll be the team captain.
Who's the I?
Alexander Strauss.
All right, Alexander Struntz. Okay.
Yep.
Okay. You now have the rights to get to the screen. Team 2, who's your going to be captain be? This list. Okay, we're going to do this with all the teams.
Oh, I can be captain.
Who's that?
Jackson Schaefer.
Jackson Schaefer. Okay. So Jackson Schaefer. All right. Team 3.
I'm going to be the captain. Kyle Katoya.
Okay. Team 4. Who in team 4 is going to be in charge?
We haven't discussed, but I guess I can be a team captain for now.
Who's that?
Armand.
Armand.
Yeah.
People, let me search this up. Last name, Y-A-Z-D and oh, thank you. Team 5 and team 6. So team 5.
Oh, that's me, Alexandra.
Alexander. E-R. E-R. Okay. And team 6.
I can Neka Anyima.
Great. All right, so you 6, once I create this network, will have access to either, again, IDEA or TMSG. Once you go there, very important, you have to select the section from the dropdown. So even though there's only one section that there's to select, you still have to select your section to get to the list of companies. Now, your team is not going to show up in the list until you start trading and start buying things. So each of you start out with $1 million right now. The rules for the game can be found here under settings, rules. So settings. When you buy or sell stock, you're buying them at market prices. So it's called the next tick. Every time you buy or sell, you have to give a minimum 50 character rationale why. So it's about a third of a tweet. But you got to have some business transaction reason for why you buy or sell a stock. Type in the 50 characters. Selling a stock is called closing ideas. It's Bloomberg language, right? So when you buy a stock, you create an idea. When you sell a stock, you close the idea, right? Now, normally, I force you to go in and auto close manually, meaning you can only sell when you manually sell. But this semester, I'm going to allow you to put in some limits that say, for example, sell it if I get to this level of profit, or sell it if I get to this level of stop loss as an auto trigger. So you can put in some triggers for buying and selling. For investments, because you're dealing with $1 million, you can't buy less than $10,000 of a stock. Okay, so just for portfolio purposes, minimum investment is $10,000. Maximum investment is 20% of your portfolio size. So you can't put your entire portfolio into one company, right? The most you can do is 1/5 of your portfolio in one company. Now, that's just to buy them. If the value of that company goes to be greater than 1/5 of your portfolio, I'm not going to force you to sell them, but you can't buy initially more than 1/5 of a company in terms of your portfolio, okay? Now, in addition, when you buy something, it has to have a minimum market cap of $500 million. So there's no sort of micro cap stocks that you can buy. And the minimum price to buy a stock is $3. Okay. So the idea is that you can't trade in penny stocks. Now, if you buy it at 3 and it goes to 2, you can sell it, but you can't rebuy it at 2. Okay. Now I do allow shorting. So you can short a stock at 3 and cover at 2, okay? But you can't short a stock below 3, okay? Now, here's the thing. You're starting out with $1 million. By Friday of this week, you must have 70% of the portfolio in some form of equity and no less than 30% or no more than 30% in cash. If after this Friday, if more than 30% of your portfolio is in cash, you will be disqualified for the semester and your team will get a 0 as a team for its grade, right? This is a trading competition. I don't care whatever happens to the market, you keep trading. You must also make 10 trades in the first half of the semester and 10 trades in the minimum in the second half of the semester. So between now and October, you got to at least make 10 trades. And if you make 9 trades, you'll be disqualified. You have to make at least 10. And again, no more than 5 can be owned at any one point in time in terms of your total portfolio. By the way, after Friday, if you sell something, you got to buy something else. So Friday, I own Walmart, and I want to basically swap out Walmart for Cisco. I sell Walmart, I buy Cisco at the same time, so I don't end up with a lot of cash sitting on my balance sheet. Okay, got to stay in equities after Friday. Now, Bloomberg will let you trade anything. This is real access to their trading platform, just without real money. But for purposes of this class, I've restricted it so you can only do equities. So you can't do fixed income, you can't do commodities, you can't do options, you can't do currencies. You just do equities and ETFs. Okay. So again, for period, I've also eliminated day trading. So the minimum holding period is 1 business day. Okay. So basically what that means is if you buy it today, you can't sell it until tomorrow. If you short it tomorrow, you couldn't cover it until Wednesday. And Bloomberg operates on business days. So if you try and buy it today at 5 p.m. Eastern, the trade won't execute until Tuesday, and you won't be able to sell it until Wednesday. Buy it on Friday, can't sell it on Monday. It's business days. The commission when you buy shares of stock is institutional commission, which is a penny a share. It's next to nothing. So commissions, you buy 1,000 shares of stock, cost you $10, right? In terms of final rules, you're buying everything at and selling everything at market prices. So whatever the current market prices are, you're buying. Now, what that means is that Bloomberg's actually going into the bid asks and it's looking at actual bid lots to try and complete your trade. So bigger trades could take a little longer to complete because Bloomberg has to match the amount of shares to do that. And for thinly traded stocks, it might have trouble executing your order if the share count is actually not available to trade. So just be warned about that. Generally, it could take 5 to 15 minutes to execute a trade from the time you hit send, right? If you have access to trade, again, idea or T message is how you get here. To trade, you click on what's called, and then select your class. This is section 201. Then you click on compose. Compose is the screen to buy the stock. Okay, you go long or you go short. Put in your ticker symbol. Okay, the default's to the last one you were looking at. This was United Airlines. Okay, so let's say that I want to buy, I don't know, I'll just say Cisco. So I want to buy Cisco. Right? It'll give me a current share price for Cisco over here. Now you won't have networks. I'm in many different simulations. You're only going to have your simulation, so you don't have to default choose. But this is this one. And then the question is, I have $1 million available to trade. How much dollars do I want to put into Cisco? So let's say I put in $250,000. I can either put in 250K or 250 with 3 more zeros after it. I then have to give a business rationale for why Cisco. And so I'll just say, I believe in the 5G upgrade and stay at home market that networking will thrive. Okay, that's why I want to buy Cisco. Then I hit send to submit my trade. If I triggered any errors, it'll tell me I can't make the trade. In this case, I can't put more than 20%, $1 million, 200,000 in a portfolio, 250 is too high. So cancel, come back here, make this 200,000, hit send, and then it will try and execute buying Cisco, right? Once it executes, you'll start to see yourself in this list, and then you'll start to see your portfolio value. So let's just go back. In the last class, section 401, you can see a couple people have already started to buy and sell stocks. So I bought last class Google, and I already lost $949 today. So essentially, this is my portfolio value. I'm down about $1,000, and I still have $800,000 left to trade. This portfolio value is how you're going to be scored compared to peers. So in the last section, we can see a couple of other people have already started trading, and all 3 of us lost money today. This team has already invested in 5 stocks. And again, you can see the portfolio value, and they've already put $800,000 to work across the 5 stocks. Okay, you need 10 total trades over the next 5 weeks. Questions about anything?
So we have to make 10 trades, right? So
Yes.
does that mean buy and sell?
Buy and sell.
Or buy and sell.
So here's what's going to happen. Longs. 10 longs is the way I look at this. So this number has to be 10 or greater by the end of the first half of the semester.
So we
Well,
don't
somewhere-
necessarily need to sell?
So you don't have to sell it. If you sell it, it doesn't count. You got to make 10 longs.
Okay.
So let's say I bought Cisco and I sold Cisco. That's only still 1 trade. I need to then take the money and to put it in somebody else to get a second trade.
All right. Perfect.
What date is halfway through the semester for this Bloomberg
It's on the
challenge?
syllabus. So
Okay.
let's see if I can go back to the syllabus. It's listed under the assignment for the Bloomberg Trading Challenge, October 21st, 5 p.m.
Thank you.
Other questions?
So is there an upper limit of the amount of trades or unlimited trades?
No, I've actually had, let's see if I can find it, like in, see if I one of the 2019 classes still lying around. In one of these classes in 2019, somebody made like 167 trades or something like that. It was crazy. And I will tell you, there's not a correlation between more trades and, I guess they're still not there. But there's not a correlation between more trades and better performance. I don't remember.
How did they end up doing?
That's what I said. They actually didn't do so well.
Oh, okay.
So I'm not saying you gotta do minimum amount of trades, but like, just because you do more trades doesn't mean you win. As a matter of fact, what the team that was making so many trades was doing is they were losing money. So they just started to just buy and sell more stuff to try and catch up. And they just got deeper and deeper into the hole. It was kind of comical how badly they were doing in a poor, hurt their grade sort of way.
I have a question. If we open up a position and then 2 weeks later we double our investment into that position, does that count as two different trades?
No.
Okay.
Well, let me rephrase. If you put like 100,000 in and then you do another 100,000 as a separate trade, then it will consider that as two longs. So yes, you could consider that as two trades.
Okay, yeah, that's what I was asking. Thank you.
But the point is just keep track of your longs more than 10 or more. First half of October is what you need. But I would just say in this market, loading up on one stock can be kind of dangerous. And I'm not saying it's going to be easy. I mean, that's the point. Like we could all, last semester, it got really ugly for a while. The market was going, nobody was making money. The market was going down for a while and people wanted to stay in cash and I wouldn't let them. So no matter where the market's doing well, in fact, the last few months have been really easy to do well in the trading simulation because everything did well. Now it's not doing so well. Month of August, market was up 30%. You could have just thrown darts at a board and did well. This month, not so much. So again, this has got to pay attention, equity rules. Somebody asked about seeing the rules, and this is section, again, what are you, 301? Good one. There you go. When you go to your section, whoever's in here, somebody's already starting to buy some stock. Then basically go to settings, rules, and you can always check the rules. But that's only the person who is your team captain can access the screen, team message or idea. But as I said, this is already open and you can see that, well, like I said, here's somebody who's already made 15 trades. I don't know if you've discussed that with your team yet, but just remember, you're discussing this with your teams, theoretically. Because whoever's the captain is trading on behalf of the team, and the team should have a strategy because it's a team grade. All right, questions? Other questions?
Can we do SPY? Just, or like
Can you do what?
Like SPYs, like SPY shorts, like long SPY.
Sorry, I'm not familiar with the term SPY.
Or like
SPY, the ETF
like
for
spiders?
S&P
Yes.
500.
Yeah, you can do ETFs.
Okay.
So for example, if you want to do, I know SPXU is an example of like a triple levered, if you think the market's going to go down, ETF that you can buy. Yeah, you can buy something like that. If that's like,
So you can do TQQQ and all those as well.
yes.
Cool.
Yeah, basically Bloomberg will tell you whether or not it's if it lets it go through, you're good.
Perfect.
I'm in this section, but I'm in a 401 group. How will I get added to one of these groups?
You can. The only way that you can be in one of these groups is you have to be registered for this section.
I am,
Okay.
like on Testudo. So how come it's messed up on Elms?
I don't know. We're gonna have to move you then.
Okay.
Because you can't be, you have to be for many reasons, but basically you have to be in a team based on the section that you're registered for in Elms. I can't have you in a different team. So unfortunately, I'm gonna have to move you. So stick around for a minute and we'll have to solve that problem in a second. I hope you're not the team captain.
I'm not.
Okay, good. because we're about to lose a team captain. All right, any other challenges or people, questions? All right, so for the person that I need to move, please stay. For everybody else, I'm going to end the session and end the recording. So again, one more reminder, no lecture on Wednesday. I'm canceling the Zoom. Our next lecture will be Wednesday or Monday, 1 week from today. Wednesday, repeat homework 3, which of homework 2. I'll put up another version of that assignment with the 500 words with more clarity, more practice. TAs will still grade homework 2 and hopefully get you some feedback this week. In addition, finish your BMC certification. So keep working on that. And again, start this group project. Again, keep up with the reading for the class. All right. So for those of you that are otherwise done, recording is done, class over. For the person that needs to transfer section, stick around.
You, Professor.